Good afternoon. This is Chris Brecher with Chart Patterns Mastery, February 27, 2025 nightly video. Don't get me wrong, we're not perfect at this. Sometimes we lean one way, but we have to pivot quickly the other. So let me show you some of the factors and show you how we ended up having a really good day, even though at first we thought maybe markets would bounce. So the first thing I want to show you is this. We talked this morning about this. This is the bonds. In fact, I'll show you with a notepad. Make it easy for you. So you're going to see the bonds, and I did this for everybody. I probably spelled a lot wrong. The ZB has positive divergence for that's bullish. The bearish sentiment is bullish. The SPX versus the 20 and SMA bullish. MACD neutral. The SPX versus the India market, really bearish divergence. The BTC SPX, negative divergence. And like I mentioned, the Russell and the Dow Jones transports under the 200 bearish. Now, there's one other thing to show you in here that's important. See this right here where I said the S&P was too far under the 20 and the 9? So was the SPX, but it kept going down. So I want you to see that in here, that the AAII sentiment was indeed bearish. But you have to respect this. This is the NASDAQ in relation to the 200. This is the NASDAQ in relation to certain other twerks to the downside. I'll show you what we're talking about. That is February 3rd. I warned about that. This is January 13th. I warned about that as well. These were all like those tariff threat washouts. So keep that in mind that we were watching that. But we were watching for a different reason. Not this as much as we were watching growth-oriented indexes were already far under the 200, under February 3rd and January 13th. In fact, the Russell's down for the year. The Russell is under the election ideas, the election rally totally. So how about the transports? Another growth-oriented index is decisively under everything I just mentioned. So even though sentiment is wildly bearish, you have to respect that other indexes could go to the same levels as the growth-oriented indexes, because the growth-oriented indexes are what everybody's watching. There are three of them. Believe it or not, I put Bitcoin in here. So you have Bitcoin going all the way to the 200. Wow. So to me, that's like a risk on, risk off sort of thing. It used to be different things in the 60s, looked at different clothes styles if that was risk on, risk off. Now we use Bitcoin. So the Bitcoin going down, the Russell going down, and the transports going down. All three of those are worries about the economy. So that made the S&P on the right and the NASDAQ on the right, on the left, more likely to go near their 200. And that's what happened. Now, what was the trigger today? The trigger to me was those 15-minute charts. Yeah, those bear flags. Now, I saw the sentiment. I saw the markets didn't seem like they want to do anything. But the key in here, obviously, you could say the bear flag in hindsight. We were showing it as it was happening. But it was also that the Russell that's been leading to the downside also had a bear flag and that broke. That really hurt sentiment. The third thing was that you were overbought in a downtrend. So even if sentiment's negative, that's what happened. Now keep in mind, that doesn't mean you had to sell everything. But what it means is it kept you from getting nailed on the downside. So that in there. So you came out ahead. We did 5 index trades. We were 5 for 5. We lost small in Lam Research, small in Amazon, stayed in Meta, and we're fine in there. And that's where we are. So we did fine. But today could have been a disaster if you were just buying just because of sentiment. So I just want to let you know that we try to combine a lot of things. I want to show you one last thing. Here's the Russell on the left. Now, we know, I've obsessed about it for everybody, whether it was in the central room, whether it was in the Chart Patterns Mastery room. or in the Essentials Room or on YouTube Live. I've been talking about this. I've been talking about the 200. And I've been talking about the SPY on the right was too far above it. You can even take the index futures. So as you see, index futures way above it. Well, what I was showing was the correlation of this. So the blue line is the 50. The red line is the 200. So when the Russell got under the 50, we said it was more likely that the ES would follow. So keep that in mind. But I want to go back now. I've showed this over and over. I love showing it. I love correlations. This is September 13th of 2023. Very, very similar. The Russell at the 200, the ES on the right way over it. So you might be like, yeah, if the Russell bounces, the ES is going to go to all-time high. Sound familiar? Now going to the September 20th. The Russell violating the 200, but the ES is still up here, 250 points from the 200. So there's your divergence, just like now. Now what happened back then is the Russell went down enough where the S&P finally listened. Let me show you what we're talking about. Now we'll go to October 18th, 2023. As seen, this is way under the 200, and guess what? This darn ES still won't listen. It got to it, and that's your first thing. This was under it, and at least this touched it at least once. That was a big move. That's 5%. But watch what happens by the end of October. Then you see what happened. Yeah, so usually what happens in this is you get this kind of daily sell-off. You get this to test the 200, but this is not bounced at all. So the things that made the ES go down in the first place are still going down. So what happened? The ES rallied on a daily chart after it hit that, but only rallied to the neckline. Then you look for the reversal pattern to play the short again. Most of the time in a sell-off, you get that second chance. Remember, the thing that made you go down was the Russell breaking decisively so many levels. That's what pulled this down to the 200. Then you got the relief rally. The relief rally went to the neckline, but the Russell hardly rallied. That's how you knew there was going to be another leg down. What do you do with the broad markets now? I know it's a broken record, but you need to see that Russell mount some kind of charge. So when you go back to on demand, did you get a charge? What made the ES go up right here? Right there. And you're going to see, when did it bounce? October 4th. When did the Russell bounce? October 4th. The difference is the Russell stayed under everything while this went only to the neckline. So we need to see the Russell. That's going on the rewind function. That's October 27, 2023. We need to see the Russell start to mount a stand, have a sharp bounce. We're not seeing it yet. If you see that, sure, then I'll get bullish, at least on a temporary rally in the ES. But there's something else to watch, and that's the ES on the right is only really 5 days from an all-time high, while this is already undercut at election lows. This is your ultimate objective, the election lows. This is under it. Bitcoin's on the way there, and the NASDAQ's under it. That is my first objective, 5,800, and then this. But the ultimate objective, that doesn't mean tomorrow. Take care. Have a great night. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.